Hey, last month, I mean, and we're getting down the road, but I wanted to have this conversation about the U.S. housing report from the previous reporting period because we're about to get a new housing report, which I'd like to talk about next week. There's an interesting headline. I don't know that many people picked up on this, and this came from Zillow. Of course, you wear you wear the Zillow brand. And the headline on this release, and again, this is from early September or the second week of September. U.S. housing market reaches a record $5.5 trillion, and that is in total value. 55.1 trillion. I'm sorry if I misspoke. And that is up $20 trillion since 2020. That, in my view, is maybe that's remarkable, and I'd like to talk about, first of all, how do you make a calculation like that?
Yeah. Well,
but what does it mean? I mean, there might be some people that would read that first data point and go, "Huh, are we in a housing bubble? Is this artificially inflated? What? That just seems like a massive amount of growth in a 5-year period."
That's right. So how do we let's start with how is this number estimated? I think, but we just think about it. Every time, let's start with the new construction. Every time a builder builds a new house, right, it's basically adding value, right? It's putting this house, adding value to the land, and this house is worth something, right? This house that wasn't there before, right, is now, I don't know, a $500,000-$600,000 house on this block. So all of the new construction, the activity and home building activity that surged during the pandemic created a lot of new value, right? A bigger housing stock, right? Means a lot of new value created. At the same time, surging demand for housing meant that existing homes also increased in value.
Yeah.
Right. So
what's the average single family home price at this point?
I think the price is around $440,000.
Okay.
The value though, right? So again, two different things,
Right.
The value of that home is around $350,000 for the typical home value in the US, about $350,000. And of course, it varies greatly within markets, across the country, right? There are some markets where you can't get a house for less than $800,000. But the point is that we saw a surge in housing demand that caused the value of existing homes to increase and builders to build more homes, which caused, of course, the total value of residential real estate in the United States to balloon, right? By $20 trillion, right? $20 trillion extra, or a 57% increase since early 2020, right? Since before the pandemics.
Mm-hmm.
Yeah.
So, from this report, I mean, there's a lot of interesting data points, and I'm just going to read from it. 7 states saw their housing markets lose value in the past year, with the biggest drops in Florida, California, and Texas. And about 1/4 of the gains nationwide came from New York. So I think that's interesting data. And New York's obviously driven by New York City. Well, what you interpret that? What does that tell you?
Well, it tells us that these markets that have lost value in the past year are markets that are soft, where the value of existing homes is actually declining. If you look through Texas markets, you get, the home values are declining in Austin, Houston, San Antonio, right? And so you're starting to see this decline in the decline combination of two things. Decline in housing demand, right? But also, right, the value of these homes, the pressure coming from competition. Remember, builders built during the pandemic, and then all of a sudden, right, they added to the value, and then all of a sudden, demand for housing slowed, right? Higher interest rates, frozen labor market, right? And all of a sudden, those prices start to decline. And when the prices decline, well, the value of those homes also declines. And so we're seeing that on a year-over-year basis in Florida, California, Texas, right? The Sun Belt in general, Phoenix, for example, is another market, right? Where you're seeing kind of this year-over-year decline in home values. And that's, of course, going to be reflected, right, when you on aggregate to the total value of residential housing.
Yeah, I mean, it's like, and I, from a sentiment standpoint, I mean, there are a lot of people, who bugged out of certain states to move to other specific states. And there was a lot of migratory pattern, into Texas specifically. And, I think for some, it hasn't been the cultural fit. Yeah, I don't think you're going to really change. You're not going to really change Texas. Texas is Texas, right? You can bring your values from wherever you came from, but you have to assimilate and become a Texan if you want to live in Texas. And Texas isn't for everybody. And I think the people of Texas are pretty proud of the fact that Texas isn't for everybody. But make sense of the sort of this specific point, right? 9 metro areas top $1 trillion in housing wealth. Collectively, they hold nearly 1/3 of all housing wealth, but smaller housing markets played an outsized role in the past year's gains. There's, so what is it? Is that purely affordability? I mean, you hear these stories about like Rochester, New York, and it seems to be kind of on a roll, and nothing against Rochester. It's a perfectly great town, but it's not necessarily the place that a lot of people are moving to or hadn't been moving to.
That's right. You have big markets, right? You have these big markets. You have New York City, LA, San Francisco, Boston, DC, Miami, Chicago, Seattle, San Diego, big markets, right? Then those markets have the most homes, the biggest population, right? And so, of course, the total value of those markets is higher. But over the past couple of years, as affordability got very, very strained, you're starting to see more and more people demand for housing, relatively speaking, demand for housing was stronger in more affordable markets. More affordable markets, but also markets where you have maybe younger populations, markets that are not too far from those big job centers, right? You're maybe in Connecticut somewhere and commuting to New York City, right? Maybe you're not far from Boston, but commuting to Boston. Right. And maybe you're in Buffalo and Hartford, Connecticut, and Boston, and Buffalo, New York. And, right. And so you've seen these markets look, Indiana is another one of those markets where you're not far from Chicago, but you can get a relatively more affordable housing. And so in those markets, you're starting to see relative price growth has remained so much strong, and prices, but also rents have remained so much strong in those relatively more affordable markets because basically people are still able to move, right? People are still able to go ahead and move up the housing ladder relatively easier than in those nearby big markets, right? And so that's part of the story here. And I think we're going to continue to see that for a while because there's a lot of catch up that's going to happen. And of course, as more and more people go into this like smaller areas, not far from the big job centers, a lot of employers are going to start to follow. There's going to be a lot of development in those areas, in those markets, and they're going to continue to grow.
Well, the next housing report for Zillow is coming out when? We're taping this on the 6th of October.
So Zillow publishes a lot of stuff on a regular basis. You should definitely check it out on Zillow.com/research. But the monthly housing market report is coming out next week, and it will give you a glimpse of what's going on in September and what went on in September in the housing market. Remember, September was also the month where we had a big decline in mortgage rates ahead of the Fed rate cuts, right? And so the big question is, are sellers and buyers coming back? Now, remember, in the summer, housing activity tends to slow. Sellers pull back. Demand tends to slow. So are we going to see slightly higher activity than usual in September because of the big decline in mortgage rates? That's the big question that this monthly market report is going to answer. So stay tuned. We'll bring it to you.
I appreciate your thoughts as always, Dr. O. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics wherever you get your podcasts, and make sure you listen to Orphe and me each week on the Center Square Radio Hour.